Yeah, so I wanted to have a chat with you really, just to see why you got into property, how you got into property. I don't know much about your background, your history. Do you want to tell me a bit about how you got to
Oh,
where you are?
well, it has always been an objective to invest in property. Um, but before investing in property, I needed to have I wanted to have a business on the side that that I will be running, um, creating opportunities for people, helping business owners, earning income, and then um, 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 diversifying the sources of income, so you can have multiple source of income as a business. One in which you are actively working, and the other in which you only need to be active when you're setting it up or buying a property and getting it rented out for the first time, and then getting the rest, the income coming. And I mean, we talk about as finance people or as accountants, we talk about investments. And today, in this day and age, one of the safest investments that is very, very low risk is to invest in property.
Hmm.
And if we are preaching to our clients, invest in property, then I want to be doing what I'm preaching. My clients should see that I am actually doing what I'm preaching.
Yeah,
So I
absolutely.
need to take the lead, um, do what I'm asking my clients to do, and then um, that creates confidence, that creates assurance, and that motivates potential clients or contacts to do as you've said.
Uh-huh.
Yeah,
And so, how
so
are you finding it?
well, it's been well. You have to let me. What's the word to use now? You have to. Is it know your owns, or I don't know how they say it exactly, but you have to know what you're doing. You can invest in property at a low risk, and you can invest in property at high risk. It depends on what you want to do, the strategy you want to pursue. I mean, there is residential property, there is commercial property, there is serviced accommodation, there is HMO. You need to know which direction you need to know where to start, how to start, what do I want to focus on. I mean, if you're starting out for the first time, it might be, I'm not saying it's going to be, if you're starting out for the first time, it might be a mistake for you going straight into HMO.
Okay.
It
Hmm.
might be. It might be a mistake going into serviced accommodation, and because I mean you have no experience of letting out a property in the first instance, so it might be. I'm not saying it's going to be a mistake. It
Hmm.
might be. What I'm trying to say is you need to know your hands. You need to know what you're getting into
Yeah,
and be ready to accept the downsides as well as the upsides.
big learning process.
Yes, yeah. So I
Always
mean,
learning.
yeah, yeah. So it's been, it's been a journey. It's been a journey so far.
What
And
did you
again,
decide to do?
well, for it, with me, because I run an accountancy practice, so I would not have time to focus on property 100%. So I decided to work alongside other people that have interest in investing in property and pull our resources together.
Okay.
So they look after the day-to-day running of the portfolio, whilst using my finance knowledge. I provide guidance on mortgage, finances, structuring the deal, tax advice and stuff. So one thing I've had to do is to partner with interested parties, because I would not, where my business is right now, I wouldn't, and particularly with COVID-19, I would not have enough time to focus 100% on property. So what I've had to do is to partner with other people who want to invest and reap rewards from property, and do that with them. And what we decided to do to begin with was to start with residential property,
Okay.
and then from residential property we've gone into mixed use property,
Okay.
which includes a commercial and residential, um, all residential let. And as we go along, it is our intention to go into HMO and probably serviced accommodation. Now we don't have any experience in that
Okay.
area just at the moment, but I mean the strategy is again to identify and work with people that are in that space, and we can invest our time, we can invest our funds, and let other people um, do the work that needs to be done.
Good.
So
Good. Good.
so
Good.
we're taking it in bits and stages, but definitely not aggressively.
Okay. So you said you've got commercial as well. So you've got commercial property and also residential property. Brilliant.
Yes.
Excellent. Well done. Are you going to be converting that property, or you're going to leave it as commercial? You're not going to be
I know
using permitted development to change it.
I know the property that we got was it was not vacant possession.
Okay.
So there were tenants in the property, so we're
Okay.
just taking it over, letting the tenancy run its course, and then should the premises become vacant, we then consider um, our
Okay.
options.
Hmm.
But right now, we are. I mean, we the people I'm working with, we are all extremely busy with our primary job, the primary work that we do.
Hmm.
So it is not time. We really don't have time to get our hands dirty
Okay.
and do those things that other people do. But certainly, if we come across um, individuals that are interested in that, and they want to um, come along as a joint venture, um, then we can um, consider um, going ahead in that
Okay.
direction.
Okay. Good to know. Good to know. So, uh, our listeners are really interested in what can we do? What strategies or what things are out there that can help to maximize profits? You got any ideas or any pointers for that?
Well, as an accountant, it is always important to plan ahead, and we always advise our clients plan. Um, you need to plan for taxes, you need to plan for your finances. So planning ahead certainly um, is a good place to start from. You don't need to have all the answers right away, um, but there are a lot of free resources out there on Google in relation to property,
Mm.
and there are a lot of paid courses as well. But I mean, there is a lot of information, but I would say that before um, before thinking of going ahead, you want to consider your tax status. Do you want to invest as an individual? Do you want to invest as a limited company? Um, do you want to be? Do you need or do you need or have to be VAT registered? And now, due to various legislation, um, things have changed, and how you invest in property has changed a lot. In the past, the first thing you want to do is to buy a property in your name and add more properties as an individual.
Yeah.
But that is no longer that. I mean, based on individual circumstances, that appears not to be beneficial anymore. But that is depending on your personal circumstances.
Okay.
So if you are starting out new, if you are starting out as an investor now in 2020, I mean, you should think and consider investing via a limited company structure, because ultimately you will get to reduce your tax liability ultimately, compared to investing as an individual. Now, if you already have properties in your name as an individual, then you need to you need to consider your individual circumstances and take the appropriate advice. Now, I think a lot of you might come across a lot of introducers offering to put you in touch with vendors that can help you convert your properties into a limited company into a limited company from your name. Now, when you're doing that, there are things to consider. I mean, you need to consider capital gains, stamp duty. I mean, what would be you should conduct a what you call like a cost benefit analysis. I know as holding property in your name, you no longer benefit from the relief on mortgage interest. You now have to exclude the interest costs from your tax returns
Yeah.
when you have properties in your name. But if you have just a handful of properties, if you have just one property and you want to convert that into a limited company, right? I mean, to convert that into a limited company, if you don't take the right advice, you would need to pay um, you would pay stamp duty, you would pay capital gains tax if the right advice is not taken. But then when you've done that, the cost you're trying to save on interest may be much greater than the interest you're paying.
Mm-hmm.
It would therefore not make any sense for you to convert one property into a limited company structure. If, however, you have one in your name and you're looking to invest in more properties, then it makes sense um, um, to consider doing that using a limited company structure. So if you have properties in your name, you want to you want to seek and take appropriate advice before deciding to move them into a limited company structure. Now, if you eventually decide to move them into a limited company structure, there is potentially a way that you could defer the capital gains
Okay.
that is payable on transferring the property from yourself as an individual to the company. But with that, you need to seek advice and make sure it is done. It is done properly. The properties are transferred appropriately, so that you don't
Okay.
risk getting into trouble with HMRC. But it is possible to defer the payment of gains tax if you decide to move the property into a limited company structure. But you would not avoid it. But it is I don't you may not be able to avoid paying stamp duty, land tax if you move the
Okay.
property into a limited company. So I mean, the tax around properties, it can quickly become complex depending on the number of
Yeah.
portfolio or depending on the portfolio of properties that you have. So it is important that you speak to the right people, to the right tax advisor and professional regarding this before you go
Okay.
ahead.
Brilliant. Okay. You mentioned stamp duty, land tax. What are your
Yes.
thoughts, or what are the benefits or pros and cons with the new announcements that were made last week regarding stamp duty, land tax, and other benefits that there might be for
uh,
investors at
um,
this time?
well, I think with the cancer with the UK government, they like to give and take. Um, so the changes with the announcement on stamp duty, land tax, there are some winners and there are some losers. So winners are those that are buying their home are buying a home for the very first time, or people that are buying a second home and making that their primary place of residence. So those are people that can benefit from the current relief that was announced. Now, I think properties you don't pay. You pay. I think if you're a first-time buyer, you don't pay stamp duty land tax on properties with a value of up to £500,000. But um, for investors, it was more or less like a catch-22, um, because previously up to the previous threshold of £125,000, stamp duty was not applicable. But now it is applicable on any if you're buying a property for £5,000, you pay stamp duty on that,
Okay,
unfortunately. Yes.
okay,
So, however, I think the IR rate has been reduced. So I think up to the IR rate was previously was at 5%, but for now it is a flat rate of 3% up to
okay,
values of £500,000 for investors. So you still pay less stamp duty. And again, I think on commercial properties, you can pay a lower rate of you could pay a lower rate of stamp duty, but based on based on that announcement, that has also been taken away. So you have to pay stamp. So there are winners and there are losers. So for investors, unfortunately, you have to pay a little bit more money when you're buying properties of any value.
okay, okay. Yeah.
But I mean, there are still some exemptions. I have heard talks um, of avoiding of how you can avoid stamp duty land tax.
Okay.
Um, but I mean, in 95% of all cases, UK investors will have to pay stamp duty land tax,
Hmm.
because you would not. I don't think the property investors are buying will qualify or fall into the bracket that qualifies for relief. I mean, one of a scenario where you don't have to pay stamp duty and tax is where an employer is buying an employee's residence. How often would an investor um, buy an employee's residence? Not too often. So again, if you are an overseas investor, it is likely that you will get some relief and exemption, but you need to make sure you speak to your accountant and your solicitors to make sure that they are checking the circumstances around your purchase, and to make sure to ensure that you do not overpay on stamp duty when you are
Okay.
buying a property.
Okay. Brilliant. And have you looked into the Green Deal, the new Green Deal incentive that they're bringing on? Is that going to be any benefit for investors, do you think, or more for homeowners?
And I think the Green Deal will be more benefit to homeowners or to people that are that are on benefit. Now, I think we need to be very careful on that. I mean, if you own a home and you have tenants living in that home, your tenants would need to be on um, your tenant may need to be on benefits for you to benefit to be able to benefit from the Green Deal. But I mean, you need to with all these things, there are usually guidance and various criteria And I think investors will need to scrutinize the guidelines and ensure that whatever they are trying to benefit from is within published and established guidelines. But certainly some OMs will benefit from the green deals.
Brilliant. Okay. Thank you very much for your time. Do you have anything else you want to share? Any top tips? Any?
Well, I mean, investing. When you want to invest in property, I would say, I mean, do your research properly. Speak to people who have done it before. Get a mentor. For some mentors, you may have to pay a fee, but you necessarily don't need to um, um, pay over your nose for mentorship and training on how to invest in property. It is really simple and straightforward to invest in property. But I think that there are a lot of training providers nowadays, sharks that are offering various sorts and types of training. By all means, before you go on any training, before you go on any paid training, you can initially do your research um, on Google and speak to. I mean, if you are not able to afford to pay for an accountant or tax advisor, you may have a friend that is an accountant or a tax professional that could initially give you um, 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 general advice. But by all means, you don't want to rely. You want to rely on professional advice rather than advice from friends. But certainly advice from people who have done it before, who are doing it, who have done it over and over again, and are reaping the rewards, will certainly be of good use. And by all means, remember to keep your receipts. If you travel to go and have a look at the property, that is the cost of your travel is an expense that you can claim against your tax return or business trading expenses. So record keeping is quite very important when it comes to you doing your property. And I'll just say, make sure you get advice, get mentorship, and don't be afraid to do what it is you want to do.
Brilliant. Thank you very much. And if people want to get in touch with you and find out a bit more about what you do or see if you can help them, how do they find you?
Well, we have offices in Coventry, and early in Arden and in Birmingham. If you want to reach us, you can reach us. You can find our contact details on our website, which is www.theaccountingclub.com, and on there you can get our number, our email address, and you can. I mean, I have a Facebook. You can follow me on Facebook or LinkedIn. My I think our Facebook handle is the Accounting Club. Twitter, it is the Accounting Club, and on LinkedIn as well, it is the Accounting Club. So you are able to. It is, I think, that on Twitter and LinkedIn it is on Twitter it is the Accounting Club, the Accounting Club, not THE.
Okay. DE
Well,
Accounting Club. Okay.
Yes, the Accounting Club, the Accounting Club.
Okay, brilliant. Thank you so much for your time. It's been lovely
You're
talking to
welcome.
you.
Same here to you.